Hey, how's it going? I just want to make a video about the economy and how stocks kind of play into that and why it's kind of heading toward disaster right now. And I don't want to go too far in depth and I don't want to make this too long. I just kind of want to get to the point. What I have in front of me are indexes and index funds, if you will. And what they are is a amalgamation of different companies that have, high value and potential value. And the whole idea is these are the major ones. They're similar to, like, you can think of maybe like ETFs or something, and ETFs are just once again a combination of different companies that people pick and choose where they think that they're going to have the most value and grow in value. And any companies that slip below that kind of get pulled and they get switched out with other companies that will probably have higher value. And the whole point to invest into this instead of individual companies is because this will have a little bit more stability than going into separate stocks. Think of it like when you have and pick and choose different stocks of your own. That's kind of like your own personal ETF to some degree. Your portfolio. Because an ETF or an index, they're essentially portfolios. Now, if we take a look at this is recently. The Dow Jones is what most people are raving about. It's been doing the best out of these three major indexes, and we're starting to see, if you look here, we're starting to see some failure, and it's going down. And if you go back in the past, we kind of see how there was, let's see, I don't know if I can go back. Here we go. You see it climbing here, and when you go back to here, this is around when COVID. I'm sorry. This one is when the right after the election, and if we go back more, we see COVID. So this is March 20th, and this is when all the companies started declining. And the reason why this decline was happening was because all these companies had layoffs. People had to the economy just kind of shut down in general. Stores closed, people went home, and what happened there was unemployment skyrocketed because everybody lost their employment. And what happened was, at that point specifically, all sorts of professionals and government programs and government workers who are high up into let's say the how economics work, and they're advisors for all these other companies and for the stock market and for the government, and certain programs came into play. And when unemployment happens, people get paid by the money that comes in, and all this money is lent out, and it's lent out by the government, and everything is taxed. And in order to make up for something this big, like a global shutdown, money has to come from somewhere. And so what happens is we have the Federal Reserve, and it starts pumping money out. And the reason why this happens is because if you look at this, the stock market starts to fail. And when the stock market starts to fail, that means big trouble, because now everything starts to lose value. I mean, it goes really complicated. I want to make this a really short video. I have some other videos already kind of explaining some of this, and I'm going to make more that go into depth. But basically, you have to make up for that. And what happens is, in the short, basically, government needs to print out money in the form of stimulus checks, because you need to keep this going. And the reason why it's called stimulus is because you want this to stimulate the market so we see a rise again. And there's many different incentives that can impact the market. The most effective way to do this is to have stimulus packages. It's the quickest way to do it anyway. Otherwise, things take too long, and you want to keep a machine like this running because it's so big. It can have devastating effects because everything's kind of connected. Or this is somewhat a representation of how everything is connected in our economy. Everything from housing to banking and lending and mortgages and uh, companies themselves. It's a huge, complex web that's interconnecting everything. And you don't want that to fail, because if that starts to fail, not only does global do global failures happen, but also uh, nationwide failures. And one of the reasons why there's many reasons why nationwide failures are bad, um, because it can kind of start this spiral, and it can also lead to more disasters that come. And as we've seen since 2020, since the COVID outbreak, we've seen more and more devastation happening, to the point where it almost seems to get worse and worse. Now, the last administration, to be honest, did a pretty good job keeping up and making sure it continued. And there were many incentives for different companies. And but there's only so much you can do, because remember, the more you print out, the more you're going to have to make up for that in the end. Money doesn't just come out of nowhere; it's printed at a loss, and that loss is for the Federal Reserve, which is a large, large bank. You can think of it as a giant bank, and it lends money out to the government. And the Federal Reserve wasn't always there. It's only been around, a couple hundred years, and it was even written to where if the people felt it didn't belong, you could write away with it. But it's become so integrated into our society and into the economics of how things work, that many government officials and businesses and banks especially are kind of dependent on it. Because now, instead of banks printing their own money like they used to, we have one giant bank that does it, and then they lend it out to the banks, which lend it out to people, which then they start bank accounts, put it in, and now that money gets lent out again. And the more you lend out money, there's interest, and that interest is kind of like an imaginary tag. And that imaginary tag, think of it like a, I don't want to say tax would be the wrong word, but it's kind of like basically imaginary money. And the more imaginary money that gets printed out, and the more money that gets printed out, the more and more debt there is. And if we fast forward, we see it rise and rise and rise, and then when it gets to a point where, let's see if I can get this going, it will start to fail again if the economy doesn't pick up that slack. Because when there's a failure, it's usually temporary. It can be devastating, but it can have a huge impact on the recovery and the recovery time, and how this huge economic system works. Now, one of the things that we're starting to notice is we're starting to see it go back down again. And this is after the new administration, Biden's, has come in. And instead of having make up that slack and having businesses open again so they can generate their own revenue and pay back all this debt that was produced, we're seeing more and more debt produced, because it seems the government doesn't think that it's the time to return back to work. What's happening right now is all those people I mentioned that are on unemployment, now there's a record number of unemployment, and unemployment is still going up, because there's a couple problems. One of the problems is inflation. Inflation is the decrease in value of our money. Now, the more inflation happens, the harder and harder it is to catch back up to the debt that was put out, or lent out, I should say. And so what happens at that point is it starts this downward spiral and becomes harder and harder to catch up, because now all this money is still being printed, and all these programs that were designed to stimulate the market in more ways than one, the stimulus checks, unemployment that's been handing out, it's not making up for the losses. And what the government's doing now, instead of letting these businesses kind of take charge and pay off their debt by hiring employees and getting the money to move in the market, because that's the way to kind of get rid of this, there's no incentive to do that. And not even is there no incentive, we're still almost forced in a way to avoid continuing work. And a lot of these programs are having a much more devastating effect. And it's making the value of money worth less and less, to the point where we're starting to see the value decline so much that the price of everything else by default is increasing. And it's not that the items like food and stuff is becoming more valuable. It's not. It's the same value, but the money itself is becoming less and less valuable. And that's a problem, because it makes it harder to catch up. And that's why you're seeing a lot of states wanting to end unemployment. And I think some of the incentives why this government system, they want to continue the unemployment, is it almost seems as if they're purposely trying to create this thing to continue going. And some of this is going to be speculation now, but it's kind of where I see things going, because not only do we have the Dow Jones, but we have the S&P crashing. And the S&P is the 500 most valuable companies. And if we start seeing those collapse, that's a really bad sign. And then we have NASDAQ and New York Stock Exchange, and seeing something like this is extremely volatile, and we're seeing it over months. This is not a common thing. This is a very unhealthy market right now. And there's a couple reasons for this. There's been, what happens when the value of something gets lost, or what affects the value sinking or decreasing, is when people don't have faith in something, and so they sell it off because they don't want it. It's like supply and demand. And the more and more shares of these different companies that get sold off, the more there is available, which brings the value down, because now there's an abundance of it. And we're seeing a lot of people who have recently joined the market not know what they're really doing. They don't know what they're getting into, and people don't realize how dangerous the market can actually be if you don't know what you're doing. A lot of people, they get very emotional during these buys and sells, and that's kind of another topic, just the whole emotion part into it, and it's why most people lose money in the market. And there's only about a 10% of investors that really make out in the end, and that's the part that gets into the emotion and also looking into these companies and the value. But something like this is beyond control, because now there's these apps, and almost everybody at any age can start investing in the stock market. And all these people who have no experience, they panic, they sell, they buy, they're not sure what they're doing, they lose money, they freak out. That causes a whole nother set of problems. And it makes the market very, very volatile like this. And what's adding even more to the volatility is the fact of this whole other kind of market introduced into the system, and that's the crypto market. And because right now it's a very hot thing, and people are seeing the value go up and down, and the whole crypto thing, that's another topic on itself, but I'll kind of show you why it's interconnected, or tell you why it's interconnected. Because people, like I just said, people have all this volatility, and so it's freaking a lot of people out, because we're seeing the market going down, and lots due to the unstable market to begin with. People are freaking out, and so they're selling it, and they're seeing the crypto market kind of creeping up. And so they're selling and they're dropping off. Panic selling is what it's called. And they're buying and investing into the crypto market. And one thing that happens with the crypto market is it's non-taxable. And the reason why people like that so much is because they can trade, buy, and sell without the IRS taking a portion of it, as they would in the regular market. However, because it's unregulated in the crypto market, that adds a whole nother side of instability. So if you're paying attention, you're seeing all these different factors of instability creeping in more and more. And there's more than that. It's kind of like if you try to build, a tree house, and you're not using levels, and you're not taping it off right, and you're not, you're just kind of hitting it everywhere. There's going to be weak points all over the place that you might not even realize at first. And that's why it's important for only people that really kind of know what they're doing, or at least studying, or really try to understand the market, invest. Because now we've seen a whole bunch of people on from the internet to everywhere else kind of gang up in these giant mob mentalities and attack the market and start buying and selling on these stocks that are worth hardly anything because they want to pump it up, kind of like how the crypto market is going. And that's another topic. So what's happening is you're kind of seeing all these things kind of colliding, and on top of the inflation, on top of the volatility, on top of all these stimulus putting us in debt, and people are also, with the unemployment, no one knows where the market's really going, and nobody has any faith right now. And that's causing a lot of problems. And it almost seems as if the Biden administration doesn't have a clue on how to handle it, or they're somehow creating this. And what happens is when all these people that are investing have their value there, you start to see that it becomes a very dangerous place. And now, on top of that, one of the reasons why people are also selling everything off in the market is because the amount of tax that Biden wants to introduce. And he's introducing all these taxes in order to make up for all these losses, because the government needs to get their money back somehow in order to pay off all this debt. And if you see where this is going, it's kind of like this endless cycle, and it's kind of a downward spiral, and it keeps going and going. This is why you need people who are very educated in the marketplace and economics to be in the office, or at least have people on their cabinet who understand this. And there's people in, I don't want to say the administration, but in the White House who do understand this. But it almost seems as if Biden doesn't care. And there are potential outcomes to all of this. One thing he says he wants to do is to tax the rich. And the negative consequences of taxing rich people is they're going to either try to hide their money, they're going to put their money offshore banks so it doesn't get taxed. Money is just going to start disappearing, furthering the hole. And it almost seems as if some of this is done on purpose, because in the end, it's kind of, because there have been a lot of people talking in the administration and before they were elected that they want to, an equal playing field. And an equal playing field doesn't always mean everybody wins. Often it means everybody loses. And the only people who are going to win in the end are the ones who know and can manipulate the market themselves. And right now, it seems like that's kind of what the administration is doing. And we've seen so much destruction on the American families, as it were. And even this situation can kind of somewhat be applied to even welfare. And I do understand that there are some aspects of welfare that could be good. But it should be rolled back to the point where only those who really need it can benefit. One of the things that's happening is a lot of these families are benefiting from welfare when they originally didn't need it because they don't have incentives. And the incentives are to create a strong family are kind of dying and being left by the wayside because there's no incentive. If people are being paid to not do anything, kind of like what we're seeing with the unemployment, like if you're getting more on unemployment, then why would you care? A lot of jobs are opening up right now in the marketplace, but people don't want the jobs because even though they've raised the amount to, $15, $16 or $17 or even more, the value of the money itself is not there. So people would be conserving energy and be basically enjoying a lot more of them not doing anything and just receiving more and more checks from the government. And we've seen different things too, like all these programs for the SBA loans and everything else. And an SBA loan is a small business loan, which I had received because my business was shut down and affected by COVID. So this entire catastrophe that's going on. And on top of now, we're even seeing cyber attacks against our nation and people trying to shut down the pipeline. And it almost seems as if a lot of this is really planned. Um, I don't want to really get too far into conspiracy territory, but there's only so much that can be explained by what's happening unless these people really have no clue what they're doing. And a lot of people who are in the market, you could tell they're not sure about any of it because they're blaming hedge funds and all these other outside external elements that aren't directly affecting it. They're really just side effects of what's happening to the market. And this is causing a very, very dangerous situation because not only is it hard to get the value back, but it's also affecting all these businesses to where now it's hard to get products for people. And now the value of food and materials and everything is going up to the point where the money that we have isn't covering it. And you have to spend more and more money, which leaves you with even less money. And there's people who are saving their money in bank accounts and they're afraid to save it. I mean, they're afraid to spend it, which is also adversely affecting the market because it's not stimulating the market because it's not going back into the market. However, them saving the money is not actually saving the money because if you keep it in a bank account, that inflation is now destroying the value of the money. So if you don't invest it into something that's worth more, that will hold value at least, or gain value, then your money is further going to decline. And as you can see, there's almost no way up from all these things happening to the market. It's just one bad decision after another, after another, after another, to the point where some of it is really starting to seem like it's a very purposeful thing. And kind of like what they were saying before they were in the administration, where they're trying to make everybody equal. Because there are other things that are happening also. There's different taxes and raising the taxes in order to get back. It's going to make the rich people have less, but the devaluation of all this money is going to make it so even the poor people have less. So nobody is winning in this situation. Nobody. The only people who could be winning are the people who know where the market's going and they're lending money out, and so with interest. And so the people who think the market's going to go up are losing out, and now they have to pay back even more money. So the only people, there's bulls and there's bears. And bulls like to get it when it's low, and when the value goes up, they sell it. And then there's the bears who, when the value is high, they lend it out, and then it drops. So now not only do you owe them back the amount you had, but also with this interest. So that's how they make money. And the only people who are really benefiting from this are the ones who know when the market's going up and when it's going down. And the only people who know that are the ones who are kind of implementing all these different techniques into the market to try to make sure that it's going a certain way, either up or down. And that would be people in the administration, most likely, or insiders, or people who are talking to the people that are on the inside. And as you could see, there's very, very few people who are making out big, and everyone else is losing. You, me, everyone. The markets, the stores, businesses, everything. So, as you can see, this is kind of like an attack on all Americans and all investors, and the people making these moves are the ones winning. This is having a devastating effect. You know, even a lot of the people who think they're going to win, they're not winning either because the value of their money is going down too. So it's like everybody is really losing here, even the ones who think that they're making out big. And this is absolutely terrible. Everything is crashing here. There's there's only so much I could say in a video like this. I want to make a lot more videos, one way that really helps people understand what's going on is to really study and learn about what's going on. One of the books that I really find fascinating, because it goes over more than just the stock market here, it goes into a lot of the economy, is this book right here. And I've showed this before on my channel, but this really gives a great uh, view of what happens globally, with all sorts of markets and economies from now and in the past. Um, and it starts to really give you a good grasp on what's happening here. And this book is called Basic Economics, and this is Thomas Sowell. But there's more too, and I'll go over others in the future. And for anyone that really wants to understand this, try reading about it, try studying about the market, and it'll all start making sense. And then we can start, really pointing fingers and really decide where we all want to go in the future, and see how we can get out of this economic mess. Um, there's a few ways to do it, and one of the ways to do it is to just get everyone back to work, and to pay off this debt, to stop pumping out more money, to limit it, to get the businesses going again. Taxing is a bad idea, because now it makes people want to avoid bringing their money here and invest into non-taxable things. We want to lower tax so people feel more free into buying, and they get more value for their purchases as well. The best thing we can do is lower taxes, get people off unemployment, roll back welfare, try to get the money back to value, get it flowing into the market again, stop printing out more stimulus. There's a number of things that we can do, but it seems like this administration is doing the opposite, and it makes you wonder if they're doing it on purpose. Just some things to think about. I just kind of want to leave it there. There's going to be a lot more videos about Biden's broken presidency, and what we can do to help this economy, because it's extremely important. And the last thing you should be doing is investing if you're not sure about companies, if you're not sure what you're doing, if you don't know where it's going. Don't ever invest just by looking at the green lines and red lines going up and down. That's where most people make mistakes. 90% of people make mistakes, and that's why most people lose out in the market. So I just kind of wanted to go over that, and that's just some basic economics, mostly to do with the market, and our economy. But I hope that clarified some things. I hope that got some gears moving. I hope that got some blood flowing into the brain. And if there's any questions or comments, leave them down below. Please subscribe, like, and share. And the more people are knowledgeable about the economy, how it works, and how it can be used to benefit, then the more we can do to help everybody. And the less Democrats and liberals there'll be. So I'll just leave it off at that, and have a great night and take care. Thank you for listening.